Tell me what you think about the sovereign debt issues and whether they're going to have, are we going to have credit crisis part 2?
Well, this is very interesting because, you know, 3 months ago, I was having all these conversations with my clients who were scared as could be that what was going to happen is the dollar was going to devalue. They wanted to get out of the U.S. dollar. They wanted to diversify their exposure. They were worried that the U.S. government was printing money. You know, I've got to get out of the U.S.
in the United States.
The U.S. was finished. We've got to get out. We need to diversify. We have too much concentration risk in the United States. The dollar is going to devalue with Fed and government fiscal policy and Federal Reserve policies. What should we do? We want to diversify and buy European assets, European bonds.
What'd you tell them?
And I told them to stay away. I told them to stay out because at the end of the day, I said, I looked at the situation. It's not. We were talking about this before. It's not an absolute value situation when you're investing. It's relative value. So when we looked at the relative value situation of the resources and the economics and the economies on a relative basis of the U.S. compared to what we felt was going on in Europe, we were much more convinced that we should keep our clients' assets in the U.S. as opposed to going into Europe. Now we have a number of those clients who took our advice, who were very thankful that they took our advice, and then there are the unfortunate few who diversified their exposure and are now enjoying the benefits of diversification, which, of course, as you know, diversification is lack of correlation. So treasuries are appreciating and they're losing money on their foreign holdings.